Good morning, everybody. Don't see too much moving here. A little green there, but still in the trading range. I think SPX could be dangerous within this range because to get far enough away isn't that far away, even where there's a little bit of premium. And so you decide if you want to take more risk, which could be, and it's kind of been working out. If you would have done an iron condor and gotten both sides of it, um, kind of up to you. But with a trading range like this, one way or the other could be, um, you know, a momentum move, which could hit those strikes relatively easily out of a consolidation. So let's just look at the option table, see what's far away. One sec. $43.50. $43.45. So again, choice. It's not like where we're getting a reversal bar like this and, prices have come down hard, premiums pop down here. Those tend to be more the no-brainers with a moving average in the way and something to the left. But consolidation like this, and today just might be another day of running in place, which is what it's doing at the moment. So your choice. Interest rates moving down a little bit. One of the thoughts over the weekend in the letter was if, the 10-year was moving down and if the transports got weaker, the markets aren't likely to look at that as a positive. And it really depends on how much they move. Just a little slow movement, probably not going to do much of anything. But if they start to pick up some momentum, well, then they're going to pay attention. And right now, markets, summer doldrums, coronavirus, stimulus, what's coming, what isn't coming. Uncertainty breeds consolidation. And it's happened after a momentum move higher, which is a positive. And we've got positives and negatives, meaning new highs get rejected, attempts to go down get rejected, and that's what makes a trading range. And a trading range after a move up, kind of trading out of the cave, so to speak, no news, who cares, is positive, but it could break lower. So we're waiting. And you can see it, more accentuated on the hourly chart. But when it gets up there, it comes down hard, goes back up. So, if you're nimble, you can play the ranges. The weekly charts are still positive. The downside was rejected. Last week was just a running in place, go nowhere week. A little candle body. Q's the same. Big red bar. Staying in the lower half, the bodies. Today's inched up a little bit, excuse me, but into resistance. So slightly bearish to neutral, bullish, and consolidating on the weekly after a sizable run. Directionless. The Russell up at resistance, but hanging up there. And the move back down to the bottom of the range, but forming a potential sell setup. Rejecting lows, rejecting highs. And it did, I mentioned this over the weekend, was that, look, even though we might have some sell setups, they ignited from wide range bars and they typically don't work out all that well. So we left Friday afternoon from the green room reviewing different sectors and markets and came away with the same thing. Things are neutral here, not doing too much. And we come in to the same thing Monday morning. Everybody's just waiting for more money, more Corona, China. And it's the same. I mean, I remember not too long ago, I don't remember how many months really, but there was a time where these markets were flipping in opposite directions all the time. NASDAQ was going up or down, and spiders or Dow were going the other way, and Russell, the transports were doing their own thing, but playing catch up all the time. And now they pretty much doing the same things. So where do you go? Where we can flip to trading something else that's trending or more active. And, over the last couple of weeks, I've mentioned currencies. The euro got down here at support, and it's, but look at the way it's gone up. Like, try to go up all the way back down, all the way back up. I mean, it ain't easy. It's just, say it that way. It ain't easy. That is a better type of a trend, and you can see, on the hourly chart. And now that's, reversing. You look to the left, MTS 101, 50 MA lined up with a pivot high. Oil, coming up into resistance, down and up. Gold down here a little bit, coming up to the left. That's what it is, Joe. Look to the MTS 101. Right? At first you hear that, look to the left, and it's like, something wrong with my neck. There's something to look at over there. And then after a while, you see what a powerful concept it is, and it allows you to remove all the hocus pocus from the chart. And it's a great thing. It was a aha moment for me many, many years ago. So a little trading range going on there. Silver, last week we talked about the little breakdown failure, a little resistance here, had big support. So just not ready yet. And what else could we look at here? There was a lot of positives that happened last week, and even in almost motionless trading, in that this mid cap index, it's up at the top of the range, but it had this breakdown failure. It can go sideways here. We were looking at that. Hopefully that the Russell would do that when it got to the top of the range, but it didn't. It went back down to the bottom of the range. So that's another MTS 101 and 100% retracement into resistance. What happens? Does it go sideways? Here we've got topping tail bar. Does that topping tail bar have little to no follow through? Or does it gap down and form a green bar? Do we get price action that supports the probability that it's going to go higher? So there were improvements last week, but nothing definitive to act on then. Well, this is major resistance, but the depth of retracement suggests the possibility of getting through it. So major resistance is one concept. A topping tail is one concept. A wide range bar is one concept. 100% retracement is one concept. And so as they come together, what MTS calls a thought building process. So as you put those pieces together, do we have an action point, which is ultimately what we're looking for? And right now, would it make sense to short this? It might, right? Just like when the Russell was up there, but you've got a tight stop, but the depth of retracement says it's not, the highest probability trade. But maybe if it starts to drop, but this support here, it's just not a great setup. So it would just be better to pass. Now, the fact that it popped above that high and was rejected again, does it mean it's going down? Or does it mean just it's price action that's absorbing the supply to the left here? We just don't know yet. So we're waiting, just like But just like the institutions are waiting here, right? If they knew something, if they had some definitive information, or if there was a sizable drop where they felt comfortable adding, but clearly they're not comfortable being aggressive as it pushes up above prior highs. Rather, they're lightening up after this move, but they're not selling, enough to break through any support, which again creates a range. So, I don't know if there's anything's going to move things today, but at the moment, there's just no evidence of that other than, we see that interest rates are starting to move down a bit. So I would set an alert, maybe put this in a thumbnail and see if it starts to accelerate lower here, and keep an eye on the transports to see what they're doing. Now, the fact that they came off of the low like they did, that was a nice retracement, which formed this green bar. But it came back down last week. It didn't stay in the upper half of the green bar. It closed below the 50% line. So while this has been going down, we need more information. Could this become what Dan calls a bear sandwich, meaning this goes back up this week? So we're looking at a lot of information here and coming to the same conclusion that we need more information, which is very helpful because, ultimately it says, unless something is really compelling, and even if it is, trade smaller, but for the most part, don't be the frog in the blender. Don't get chopped up, because this is what's been going on lately. Bitcoin, it's up at resistance, a wider trading range, and it's being rejected from there right at this moment. Deep, it's early, but deep into this range here, but in the upper part of the wide range bar on the weekly. So we've got these mixed messages no matter where we look. And we all know, the tech stocks had a heck of a run. They're consolidating up there, some profit taking going on. So as we look at what's beaten down, what starts to turn around to bring up the rear? And accidents are happening out there. That was a 20-something%, drop. So one of the comments in the letter, I think 2 weeks ago, was, although there are positives here and some neutrals and whatever, it's still a minefield. And that is the idea of, the thought of a minefield, is that we're in a market environment where a misstep can be extremely damaging. What else? AMC's up here a little bit. It's just going to roll over. It's been having a real hard time at 40. There's a lot of open interest there, puts and calls. And I noticed that the bottom strikes are starting to build up, some open interest. So I think a break below here, and this thing just might have a little bit of a hiccup to the downside. We need to see if it'll actually, trip. And that's about it. Well, GDX had a nice move last week, right? Similar, 100% retracement, getting rejected at resistance. Can it hang up there? We need more information. So, everywhere we look, it's the same message. Short-term interest rates just hanging up there. They had their move off of the low, 5-year, inching down. So one of the things, just set an alert, no need to stare it. Set an alert if this starts to move up and the 10-year starts to move down. That's a 30, but the 10-year, or either one of them, they start to move down. The market isn't going to like that. So giving you some clues as to what to look for in a market that is just marking time. To you, Dan.
Good morning. Hope everyone had a great weekend. Yeah, I'm kind of on the camp of, I think we're going to be range bound here today. Kind of a non-issue bullish gap, but no great price voids. Our opens are fine. We're we're on the obviously on the bullish side here, so everything looking good. We only have 3 open positions in the weekly options trader. We actually had a good week, 11 for 12. The only loss last week was this stupid NEO, thanks to China opening its big mouth. We'll come back to these, but everything else worked well. We still have a triple D put spread gapping up. Tesla, we did a 0 DTE, plus we already have one open for this coming Friday. That's gapping up. That looks fantastic. And Deere, John Deere, this is a beautiful example. Yeah, John Williams. Yeah, our Tesla looks fantastic. It's a hold. It's not a new trade. It's a hold. This is a great example of relative strength, and we did it. We did it. We sold a put spread on Friday. Had Thursday had the gap breakup out, but we were waiting for Cat's earnings, which were horrible. Well, the reaction was horrible. I have no idea what the earnings were, and I don't care. But nasty gap down was selling off. And look what our Deere was doing. Was doing great. So we sold a put spread on Friday, and now it's gapping up here. My alarm at 364 went off, and I just think there's 99% chance this is excitement in the infrastructure thing getting passed. So those are our 3 trades there. I think in our advisory, we're 100% bullish. Take a quick look. Yeah, we don't have a single short, and we got over 20 open positions there. So we're doing good on opens. Thomas HSBC. Gapping down 2750. I wouldn't touch it unless it took out last week's low, but it is in a downtrend. It did reverse. Look at Jets here, same type of looking pattern. Jets, RCL. RCL, it was in our local paper. We had 2 cruise ships, two RCL ships leave Lauderdale on the same day, and they said that made news because they haven't done that in a long time. RB, I'm long, SHEN. SHEN. Well, I don't know where you entered and where your stop is, but there's no pattern. It actually broke down Friday and snapped back. I see one print up here at 54, but I don't trust it unless it's liquid. But so it's a junky bottoming pattern, really. There's so many other stronger stocks to play with. Thomas FCX, Deere. You said FCX short? There's no pattern. It's 100% retracement, gapping up. I don't know what to do with that. That's not a short. Jacobo Deere. Yeah, Deere and fast. Deere was actually in our weekend letter as a long, but it's gapping up. So I just texted them to say hold off. We'll watch it on a pullback fast. Yeah, Greg, that didn't show up in the 1, 2, 3s because I surely hit them all. in the bear ones, and I obviously hit all the WRBs, bull and bear. I think there's 97 bear 123s, which is where I found a couple of shorts ideas for us. But yeah, fast is a nice 123. I like that. Yeah, it looks beautiful. I don't see any pre-market action, but ideally, particularly on Mondays, I like when they trigger over a 30-minute high. McGraw, this Rio, he's a gappy little guy, but remember last week we were looking at either the 80s or the 77.5s naked puts. Let's keep an eye on that still. Stephen A&F. 30-minute low, Stephen, sure. That tail is real. How do I know? Look at the 15. Look at that, ripped up there, 39.70. So that, yeah, 30-minute, it's on support, but it's bearish. AGCO. Yeah, it's spotty pre-market, maybe 30-minute high. Bottoming pattern, trades too whippy for me. So Tesla we talked about. Triple D we talked about. We have two trades there. We're long stock. And no put spread. SWI, they did a special dividend. All right, so these three EV stocks, they weren't earnings, but I guess the first of every month, whatever, they release their sales. And it's a beautiful, nice pre-market. That's a nice gap, nice going sideways. 42.86. Problem is it's at the top of the range. Two more here, LI. LI I like better. If this can take out the 30-minute high, I like that. So let me put that in a window. LI, 30-minute high, I like that. Neo, I like LI the best. Do you remember when we did that MT Live from the optometrist? Do you like A or B better, A or B? That's what that reminded me of. I like LI the best of those three. ELPN, sloppy as can be, but today looks like a shock bar. We'll see what it looks like in 30 minutes. Bottoming pattern here at the 200. I don't see any gap, but we'll come back to you. ON is on fire here this morning. Gap's too big. GPRE, it's a nice breakout. At the top of the range though. But let's watch it pull back. Strong daily, weekly, monthly. Gapping up here, maybe put spread, but I wouldn't touch that thing as a directional. That's a bottoming pattern and just slop. I just noticed a recent IPO extended now, but looks like it's shaping up. Square. Wow, they recovered this loss. They're doing a stock purchase of some competitor for, I think, 29 billion. In my weekend scans, WRBs, this one popped up. Hilton Grand Vacations. I love gap reversals with a price void. So it's also, well, maybe it came in my 123s. I forget which one. But it is a 123 target prior high. That's worth watching. Hey, John. TPX, it also is a 123, but when do you say the bar is too big? It's a visual thing for me. I mean, come on, this thing, that's a big old bar. far from the 20. But I actually was looking at this, maybe to just sell the $40 puts. So let's keep an eye on that. Box here. It's a 1, 2, 3. If you can get over these highs, you got a price void. I don't think it's going to make a new high because of the bearish retracement, but it's a trade. We're traders, swing trade. Over the highs, that looks good. BSX, too sloppy for me and too far from the 20. Wow, 9 million shares. I'll get good ball. Oh, it's right here. My next one was BSX. Unless I just typed it in there by mistake. JR SPRT. SPRT. There's no pattern. I mean, it is a pullback in an uptrend, but it's not a buy setup. There's no support. That's far from the 20. So it's a very poor buy setup. Oliver AHPI. AHPI. Well, day trade, sure. Day trade short. The bearish gap down. Look at this. Now, this is actually a good example of support, resistance, and price void, right? Look at all these football players up here. These are football players. Look, my support is way down here. This is a price void. So it's a bearish gap, bearish consolidation. So yeah, 5-10 minute low. It's a day trade short, sure. Hey, John, just so you know, just for clarity, nothing triggers at the open. We gotta, play a 5-minute high or a pullback. So yeah, AMAT we had as a put spread, and then you're, I guess, saying it's gapping over. So and that's another reason why I purposely give limits on credit spreads, so you don't get caught into a big gap like that, because we're only going to get filled if it pulls in. AMKR Nicola for Jose. AMKR. There's no pattern. It's just kind of a churning little uptrend, but there's no pattern. Nicola, 30-minute low. Could be a day trade. Sam, Mara. There's no pattern. Cliff. Sam, you got to tell me what you're thinking, because it's not jumping out at me what you're thinking on Cliff Clavin. Tick over 1,000. I mean, it's a climactic sell setup, but there's no good pattern to short here. So I have no idea what to do with that. All right, so AMAT. Yeah, AMAT looks great. All right, so what I'm going to do with AMAT, excuse me, I'm just going to say it's a go if you get filled.